So you're at a crossroads. You know you're going to be moving out of your beautiful house that you've called home for the past few years. What now? Do you sell? You've heard of people renting out their homes and becoming a landlord. Does this make sense for you though? At the end of the day, it's just running the numbers, and in this video I'm going to show you how. Hey, what's up guys? It's Sean, your Charleston realtor. The age-old question was always, should I rent or should I buy? But now as more information is available, the question is becoming, should I sell or should I rent? More people than ever are becoming landlords, and I think that many of them are making a huge mistake. Here's how I analyze whether a homeowner should sell instead of rent out their home. So right off the bat, I'm gonna make the assumption that you bought a home years ago and probably poured a ton of time and money into it. Because this is years later, it would be meaningless to use the term return on investment. Instead, we're going to talk about another term, return on equity. In other words, what return does the money that you have sitting in your home actually give you as a rental on a yearly basis? First, let's take a look at the equity you have in the home. A good way to calculate your equity is to take your projected sales price and subtract your realtor commissions and loan balance. So let's take this fictitious home. Say it was bought for $325,000 and after a few years, you owe maybe $300,000 on the loan. For simplicity, let's say your monthly mortgage payment is $1,500. Let's also say that the home, if you were to sell it today, is worth $400,000. Now subtract 6% for realtor commissions and other fees, you're left with roughly $375,000. $375 minus $300 equals $75,000. You have $75,000 in equity if you were to sell the home. That was the money that would go back to you. Next, let's take a look at the rental market. Let's say that you can rent out your home for $2,200 a month. That's great. Your mortgage is only $1,500, so you're making $700 a month, right? Well, not so fast. Let's subtract 10% for a property manager and also another 10% to account for vacancy and maintenance. After that, you're left with a much more modest number of $1,750. Subtract your mortgage payment of $1,500 from $1,750 and you're left with a monthly cash flow of $250, which comes out to be $3,000 per year. Lastly, let's divide your yearly cash flow from the equity you have in your home. So in this case, it would be $3,000 divided by $75,000, which comes out to be approximately 0.04 or 4%. So each year your equity is making 4%. 4% isn't great, and of course I'm no financial advisor and every situation is different, so don't take this as financial advice, but I personally would look to sell the home and redeploy that money elsewhere, someplace that could give me a higher return, such as the stock market or other real estate. All hope isn't lost though. How can we change that number? Well, maybe we could increase the rent. Instead of $2,200 a month, maybe we can get $2,400 a month. Instead of making it a long-term rental, is there an opportunity to use creative rental methods to increase the monthly cash flow? I actually made a video on this topic, the link's in the description below. Could we refinance the home to a lower interest rate, thereby increasing your monthly cash flow? And could you self-manage instead of hiring a property manager? All of this to say, don't immediately give up when your return on equity is low. So I'll wrap this video up by briefly touching on the advantages and disadvantages of converting your home into a rental. So a perk of owning investment real estate is that you can take advantage of that long-term appreciation to help build your net worth. Also consider that the income you make from your rental property will typically not be taxed if you do it right, since expenses and depreciation is usually greater than your income on a yearly basis. Your tenants are also paying down the principal over time, and even though you can't touch that money, your net worth is still growing. It could be as little as a couple $1,000s a year, or it could be as much as $10,000 a year in principal paydown. It just really depends on your interest rate and where you're at on the amortization schedule. But on the other hand, being a landlord has inherent risks, especially if you're new. If you hire a property manager, then you're going to pay them to manage the property, usually as a percentage of monthly rent. Here's my beef with property management companies. Their priorities are in direct opposition to yours. For instance, they'll get paid anywhere from 20 to 100% of the monthly rent to place tenants in the home. They make a lot of money on turnover, but you as a homeowner just want to have long-term tenants. Also, when something breaks, they'll use their preferred vendor, who in turn gives a kickback to the property manager, not to the homeowner. Another disadvantage of renting out your home is that a major repair could wipe out years of cash flow. For instance, if you need to change out the HVAC, it might take 1 or 2 years of cash flow to make up for that. Also keep in mind that insurance and taxes will typically be higher for rental properties. All of these are factors to consider when you're trying to make the best decision. Also consider their tax implications if you sell now versus down the road. There's this thing called the primary residence capital gains tax exclusion, which means that up to $250,000 of capital gains is not taxed for single filers and for joint filers that number is $500,000. The way to qualify for this is you need to have lived in the property for 2 of the past 5 years. So if you have a substantial capital gain, then it might make sense to sell sooner rather than later. And as always, consult your tax professional because every situation is different. So that's my take on whether or not you want to rent out your home. If you enjoyed this content, please consider liking and subscribing. It helps me out a lot, and I'll see you in the next video.